What's up, everyone? Back doing another video. In this video, we're going to go over big earnings this week of the week of 8/23, August 23rd to August 27th in 2021. Now, first one is Intuit. There's TD Bank too, Salesforce, Workday, Best Buy, Dell Technologies, and Splunk. Those are some big companies, and we're going to go over them just a bit. So let's just see what Intuit has been doing for the past 3 months. So it's up nicely. So the main thing is the earnings. So we see that it's been having a good quarter. Though we see that it had bad earnings, but it had a good quarter. So for the past 3 months. So this is a good, just by looking at it, it's pretty good. And the earnings, without looking at the most recent two, it's just all green. For 20 quarters, only two of the quarters had red on at least one of the columns. So they're just beating and dominating. And Intuit is a good company for tax. It's pretty nice, but the question is earnings. It doesn't look on its favor, but look at that earnings per share, $6, and it still missed. The quarter before was only 68 cents. So they're obviously growing. And the analysts have been surprised they put it that high. So yeah, but they still had a good quarter though, down. So the earnings might not be the best, but I really think that the next quarter will be a good one for Intuit. In 1 year, it's up even better. So Intuit is nice quarters. So Intuit would be a company to watch as they're having earnings this week. Yeah, and the next one is TD Bank. So let's check out TD Bank. So TD. Stop. So let's check it out. So the past quarter, it's been down. So let's check how their earnings have been. And their earnings beats and their quarter's down. And theirs is not as good as Intuit. We saw that Intuit was all green pretty much. Their earnings have been good recently, but we see that the quarter is down. So we have to consider that the quarter was down from 73 all the way down to 64. So you have to consider that. Now it is 67, but you really have to consider that their bad quarter. Now 1 year they're up, but the quarter is what concerns me the most. So I'd say stay away from this stock. You might miss out on it, but it just looks like that. For the short term, it might be good. I think that they'll beat earnings. At least it really seems like they'll beat revenue at least. So it might be good for the short term, but I think that it'll be another down quarter. Because I think that they won't be making as much money. So I'd say stay away from TD Bank. And that Intuit, buy. I'd definitely say that they'll have another blowout quarter. Not necessarily for earnings, but they'll go up in the quarter. So now Salesforce or CRM. Salesforce is a good company, and they're big enough to be in the Dow Industrial Average. In their quarter, great, up 14%. Year, not as good. It was 208, and then it really shot up. So you can see it was on August 24th, 2020. It was at 200, and 2 days later, it's 272. So that run up. So that was four quarters ago. So that could really change a lot of things just looking at that, right? So let's just take a look at their earnings. Yeah, they're beating. Look at that. So they beat, just all of it's green. So Salesforce is just, they're really gonna have, it just seems like on the path that they're really gonna have good earnings. They're definitely gonna be on earnings per share or revenue, but will they be on both? At least the past 20 quarters, they're all of them on the top and bottom lines, they're all up. They all beat estimates. So their quarters really just seem blowout. Past 5 years, it went up 231%. That's a lot. And that's because of these great earnings. So Salesforce, I'm thinking that it will have good earnings. I mean, you just look at it. The odds just say how. Like beat. So the odds really say that it'll go up for the earnings. But as we've seen recently, good earnings, like for Apple, good earnings won't mean short-term up. Like Apple, they went down on the first few days, but then they found a way to recover and blow out so many percents. So I'd say Salesforce in the next quarter will go up, but time to buy now, like before earnings, at the thing that might not be the best, but of course Salesforce is different from Apple, but that's just what I'm thinking. Workday, another technology company. And that for the past quarter, flat. It was 230. It's 235 exactly a quarter ago. And it only went up 62 cents or 0.25%. Now that isn't that favorable, making only 0.25% a year. Or a quarter. So I guess it is better than a savings account, but there are a lot of stocks that would move more. You can check past year, it's up to 23%. See, it got so high that this stock might actually be undervalued. Or it could have been overvalued the whole time, but it does look undervalued. So let's just talk about their earnings now. So Workday. Go down to the earnings. Really like Salesforce, except they missed because of COVID on earnings per share, but yeah, it's still blowout. For the past 20 quarters, they've only missed earnings per share once, revenue 0 times. The stock still could go down. So I'd sort of say it's like Salesforce. I'm probably gonna buy it in I'm probably gonna hop in a few days after earnings because I'd say that they'll have good earnings, but I'm just gonna buy it a few days after. That's really what I'd say for a work day. Now we have Best Buy store. Now that's pretty much for a COVID thing. Will COVID get bigger, or will it get worse, or will it get better? That's really a thing to consider. So the past quarter, it's down. It's not good. And it really did move a lot. 117, it went down to 107. It isn't that much moving, but because it doesn't move that much, so then they zoom in it. The chart, it looks like it moved a lot, but it's pretty flat. But down 2.5%, nobody would really want that. Past year, flat, up 0.5%. That's even near savings, so not that favorable to stock. Past 5 years, it really blown it out, but that's getting a bit far. The main thing we have to look at is the past quarter and the past 4 quarters. It's just been flat. Let's see what happened with all their earnings. See if we should buy it now. Do you think that after it dipped for COVID, you think that it'd keep on going up because COVID's improving? It's not the end of the world. So yeah, they still have pretty good earnings. They only missed earnings per share once, which is less than 1 cent per share. And then revenue, not the best, but the most recent quarter, they beat by 81 cents earnings per share for a blowout of $2.23. So that's really grown of what the expectations thought. So it is a lot less from the quarter before that. And revenue, they beat by a whole $1 billion. And that's really blowout. Especially having 11 billion, 1 billion is a blowout. So this has good earnings, but the question is, will it go up? I'd say that it'll have a fairly good quarter, but I'd say that other stocks that I talked about, like Salesforce, Workday, Intuit, I'd say that those stocks will be better than this one. Though if you want to buy Best Buy, I would not blame you, but this won't make you 30%, 100% in the next quarter. Best Buy is a more safer company, a smaller beta, so yeah. Now let's check Dell Technologies. Technology company, as it says in the name. So Dell, down in the quarter. And we've seen a lot of companies actually down in their quarters. So it hasn't been the best quarter. Year, up 65%. So that's really blowout. Now the question is, why is the quarter bad? I imagine the quarter was about here at the top, and it's been pretty flat since. But it really ran up. So the most recent quarter probably wasn't the best, but it's sometimes good to buy low or buy when stock's slowing down, because you never know when it'll start earning back again. Supply and demand. But yeah, let's check it out. Beat. And they've had lots of, the earnings per share aren't bad. They've been beating a lot. And this company is pretty recent. And their earnings per share beat every time but their first quarter that they reported. Revenue, most recent 6 quarters. So they're just beating it. And they're beating by billions. A billion, that's a lot. 50 cents earnings per share, that's also a lot. So you can see that Dell, and I think that Dell has the potential to run up, not necessarily this quarter. It won't run up that much, I'd say, but in the next year, this company, I think that it has a chance to get to 150. Now that's more of an exaggerated guess, but it has a chance because of how good their earnings are. This company is just, I like the way that this company actually is run. So yeah, now let's check Splunk. Now Splunk I've been tracking for, I don't know, maybe half a year, a bit longer, but this company, it's not my favorite. So it is up 21% in the past quarter. That's great. Though you do see that it went down right at the beginning, down 10%, but then it really ran up. But the past year, now just look at that, down 30%. I was taking a look at it when it was way up in its 200s, thinking that this wasn't the best company. So though it is up for the quarter, we have to consider what happened in the past year, right? It's down, down. And look at that. And it was 205 on one day, December 2nd, 2020. And on December 3rd, it's 158. It went down nearly 25% in one day. Now we have to worry about that, right? So Splunk, let's check it out. Splunk. So for last quarter, they pretty flat. They beat revenue by 10 million, but earnings per share, their earnings per share really were a lot worse than estimates. So that's bad news, but you see the quarter's up. But let's check what happened in the past year. The revenue missed for some time, you see, in these 3 quarters. Yeah, the quarter 3, quarter 2, and quarter 1, they say 2021. Those they missed by revenue. And also their earnings per share were negative then. And when your earnings per share is negative, that's never good. So that's why it's pretty going down. So I'd say stay away. And this isn't the best, though you can see that it had a great, but earnings per share and revenue for so many quarters. But then it's been starting to slow down. I'd stay away from this stock. And yeah, this is the end, and we'll go over what we talked about that had big earnings. Intuit, TD Bank, Salesforce, Workday, Best Buy, Dell Technologies, and Splunk. Nice and big companies happening this week. And you might want to consider it. And my favorites are Intuit, Salesforce, those companies. And for the long term, those companies can actually do pretty well. Maybe Dell Technologies, but I just recommend to stay away from Splunk after what happened to them in the past year. So yeah, thank you everyone for watching this video, and see you in the next video. Bye.